How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for April 16, 2019. Here's the data that was recorded as of that date. And so let's take a look at gold. Okay, so let's take a look at this. Now, I've been saying for some time now that we have been expecting some profit taking on long positions from the institutions, and we've had this idea of them accumulating along up until this area and then eventually taking profits on those longs for quite some time. And now we are seeing that the data is really coming through for us. Okay, this is quite amazing. Okay, not only is it coming through for us, it's coming through for us in spades. I mean, if you take a look here, okay, you can see that long positions just back in March of 26, they had 214,000 long, and now it's down to a cool 183. Okay, now you take a look at short positions from a 94,000 to 126,000. So that's obviously quite significant. Okay, and we can see based on the coloration of the cells here. Okay, the previous 3 weeks they were somewhat neutral, and now take a look at the coloration of the cells here, becoming more bearish. All right, even though net positions are still in the positive, okay, a positive 56,000, the sentiment is telling us that it's becoming more bearish based on the positions. So this is obviously very much in line with what we've been expecting, and just shows the power of doing the correct analysis and how we're able to understand what the institutions are going to do before they even do it. So really doing well with gold and the trades that we have open currently on gold as well. Now we take a look at oil, and so what do we have with oil? So we've been expecting them to accumulate a long position to cause price to get up here, and it's with the understanding that when price gets up to this area here that we would start to see a momentum shift to the downside. And so with this candle here consolidating, what do we see with positions? They're taking some profits on longs, reducing them from 621 to 616, and we see a slight decline in shorts. So that's okay, right? If we still look here, they're very much bullish with 86% exposure to the long side, and still somewhat very strong, right, with a positive 515 to the long side. That just means when price was up here, they were still making sure that price was going to continue to the upside. Once it gets up here, I'm sure that the data is going to reflect what we believe is going to happen with oil. So we're still waiting for that set of data to come out. Now we take a look at the dollar. And with the dollar, we can see that some longs have been closed from 44,000 to 43, and a slight decline in shorts as well. Bottom line is still bullish, sitting at 75% exposure to the long side, and a slight decline in net positions from 29,000 to 28,000. That comes with this candle dropping right down here, but we can see that since then we had a big push to the upside, and we've been expecting this. Okay, we've been expecting this area to be taken out and for price to continue to the upside. So that's what we continue to expect, is a bigger push to the upside. And I think the data will start to further support our analysis in the coming weeks with some stronger increase on the long side. Now we go over to the Aussie. What do we see with the Aussie? So this push to the upside, and the data tells us that shorts were being closed off. So you can see, yes, some longs were added, but the vast majority of this move to the upside was not caused by longs being increased, more so by shorts being decreased. So that tells us something really important. That tells us not to expect something like this. All right, and if you take a look at net positions, negative 54 to down to negative 46. So a slight decline in the overall bearishness, but still we are with the assumption that we're going to see a bigger push to the downside like that. Okay, now let's take a look at the US CAD. So what do we see with the US CAD? So this data represents this candle to the downside here, some consolidation, but a red candle. And we see that they didn't hardly touch their longs and they closed off shorts. So again, this is in line with what we've been expecting. Okay, and with this closure of shorts, we get an increase in long exposure from 73 to 79. That's great. Take a look at this. Net positions up from 43 to a positive 49,000. This is exactly what we have been anticipating. Okay, an accumulation of longs, closure of shorts in preparation for a big move like this to the upside. So everything is aligned perfectly so far. All right, so now we go over to the US Swiss franc. And what do we see? Price was consolidating and a big increase in longs, decrease in shorts, a jump up in long exposure from 83% to 86%, and even with net positions. So once again, perfectly in line with what we've been anticipating for a very, very long time now. So it's wonderful to see it play out because, you know, you can do the analysis, you can analyze the COT report data, you can analyze the supply and demand on the charts, but when you actually start to see it play out right in front of your eyes exactly as you were anticipating, it's just quite magical. So we go on to the next one, Euro US dollar. And we see longs increase and a slight increase in shorts. So not exactly what we've been expecting, but overall, we've been expecting bearishness on the euro, right? So whatever happens over a couple weeks of data, it's not going to affect what our overall consensus is, okay? We've been able to determine that all throughout this area here, the institutions were accumulating a short position, and that is in preparation for a move like that. And so it's just a matter of time until that move gets fulfilled and we see a bigger push all the way down like that. Now we have the pound US dollar, and we see an increase in longs from 36 to 45,000 and a slight increase in shorts, which causes net positions to go into the positive. Somewhat neutral, a little bit more bearish, bullish I should say, but nothing spectacular. I'm not liking these charts, I'm not liking what's happening, and I'm not liking the data. So it's not telling me anything strong, and therefore there's nothing much more to read into this except for they're still very neutral. Alright, so now we go over to the US dollar Japanese yen, and what do we have? Boom! Once again, look at this increase in longs from 91,000 to 118,000. We've been expecting this move to the upside ever since this big dip. We knew that this was going to take place, and it's so nice to see the institutions coming in strong with their long positions. So, expecting more upside with this one. And so we have now the Kiwi US dollar. We see a slight decrease in longs and nothing much happening with shorts. Bottom line is short exposure increases from 52% to 54%, which is good. Still neutral, but slight bearish bias here based on their net positions. So we're expecting this, we're expecting that, and we're expecting a bigger push to the downside in the weeks/months to come. And I believe that is it. US CAD, we've already done that one, and that's pretty much it, ladies and gents. I hope you enjoyed this one. That's your CFTC report for April 16, 2019. If you have any questions, want to learn more about how we do this analysis and how we're doing this daily within the community and how we're teaching everybody, all the members and students of the school, how exactly to analyze the COT data and how exactly to analyze the charts, so that we know how to open positions and be able to predict where price is going to move. Yes, that's right, I said the word predict because that's exactly what we do. Send me an email, whiteoakfx or whiteoakcapital@outlook.com. That would be a good email to write me. Or you can go to our website, whiteoakfx.com, and you can find out more information about that. All right, ladies and gents, thank you, and have yourself a great weekend. Take care.